What's going on? What's going on, everybody? Yours truly here, the Brockton Credit Guy, coming at you guys live again here on my YouTube channel. The owner of Depina Credit Solutions and the author of #1 new release book on Amazon, Unlocking Your Credit. Go to unlockingyourcredit.com, right? I'm coming at you guys again with a video that I've been putting on hold for such a long time. I get a lot of calls, a lot of questions about this. And I want to make sure before I start talking about this information I provide on my YouTube channel are more for educational purpose. It shouldn't be taken as a financial advice recommendations. It shouldn't be taken as a legal advice. This is more for entertainment purpose, educational purpose. Anything out of the scope, you should be doing your own research. You should be hiring a legal expert if you need those help, right? So investing 101, investing, especially in stock market 101, right? And I want to talk about this because this is stuff that I do on my day-to-day basis. It's my hobby. It's my extra stream of income that I have added. And I've been doing this by now 5 years, I would say, close to 5 years. I've been investing. So what is investing in stock market? Stock market is literally like a marketplace. Think about this. You're going to a mall and you're looking for sales, right? Stock market has allowed a lot of people adding extra streams of income, right? To their 9-to-5 jobs, right? Now everybody from, kids that never invested before, grandmother, everybody is able to go there. It's open for everybody. You go in, Eastern Standard Time between 9:30 to 4 p.m. Eastern Standard Time. You basically buy shares, right? And basically you're buying stocks, right? You're buying shares of a company. Basically, you're becoming an owner. Just look at it as a pie, right? You get a pie out of that whole share there, that pizza. Basically, you just became an owner. So next time, if you buy a McDonald's, next time you're in line in McDonald's and you have shares, you have stocks of McDonald's, you could probably go in and tell them, listen, I'm an owner of McDonald's. Because you bought a share, you actually own it. You could be a 1% or a little bit of percent of owner, but you're an owner and you have the right for to vote and everything else, right? So investing 101, I want to make it simple, short, so you can understand, right? But before you get into investing, I want to make sure, right? I didn't start investing until I follow this principle, right? You want to make sure that you knock out high interest rate debt, right? Debts on credit cards. You want to get rid of it, right? Debt on, for example, your home. You want to refinance if you're paying anything over 4 or 5%, right? Especially on the loans and personal loans, such. Refinance it for a lower interest rate of bonds. I usually tell people, any interest rate over 5%, you should refinance it or pay it off before you start investing. Because what's going to happen when you go to investing, I don't want you to take money from your money that you would have paid your credit card to put on a stock market, because it doesn't make sense. It's counterproductive what you want to do. You want to make extra income, you want to learn, etc., but you don't want to be stressed out. Oh, I should have paid my auto loan or my credit card instead of doing, because the market is going up and down. Market are volatile, right? So it goes up and down. It's like your blood, your sign, your blood pressure when you're stuck to an IV or EKG in the hospital. You're gonna see it. There's days that's gonna be awesome. There's weeks that's gonna be outstanding. There's weeks, months, days that's gonna plumb down to the ground. This day you're gonna make money. This day you're gonna lose money. This time you're gonna lose all your money. This time you're gonna make a ton of money. So I'm on stock market for long term, right? So I've been investing 5 years, right? And what I do, I buy company that I believe in, right? company that I probably use on day-to-day basis. So first thing you want to do, you want to make sure you pay off your high interest rate debt. And then what you want to do next, once you pay that, you want to open a brokerage account. What is brokerage? You can't just go up to Wall Street and say, hey, I want to invest. I want to go to NASDAQ. I want to go to the stock market and invest. No, you need a middleman. You need a middle before, right? In order for you to invest, it was so difficult, like probably 10, 20, 30 years ago, right? You had to like literally hire a brokerage firm, right? A financial advisor. Financial advisor had to be working for like a firm, and then they had to call in manually to the stock market and probably by the end of the day buy your market order, buy your stock that you want. So it was too hard. Now, thanks to like brokerage accounts, brokerage firm like Robinhood, right? One of my favorite if you're starting to invest from the beginning. I'm not putting any affiliate link here. You could go to Robinhood, download the app. Very easy. Open a brokerage account. Transfer money there. You could transfer. You could start as low as $100. You know, you could start as low as $1,000, whatever you want to do. I started with $1,000. I put it there. And what I did in the beginning, because just open it, you wait probably a day or so, they'll approve the application, you transfer the money, you wait for the funds to be there, right? And you literally have money in your pocket to go to the market and buy things for cheap, right? So that's basically what it is. It's like you're going to the mall and you find things on clearance. But a lot of questions I get is this, Arthur, well, which stock should I buy first? Well, again, this is not a legal advice. It's not financial advice. This is strictly education, entertainment purpose. I want to make sure I make it clear out there, right? Because I don't want you to lose your money or whatever, gain your money and say, hey, Arthur told me to buy this, that. No. So my favorite, right, when I was starting to invest in, where I learned, I buy what they call ETFs, right? ETF is an exchange trade funds, right? It's basically brilliant people, brilliant group of people that just basically bet against all the S&P 500, all the stocks, like 500 stocks, right? The best company, right? It's like a basket. It's like, for example, you're going to a restaurant, you want to try which appetizer is good, but you don't want to buy all the appetizer, right? So what you do, you say, hey, you have a platter, right? So normally what I do, I buy a platter and then I try the different appetizers and see which one I like. And then next time I know specifically which one to buy. So that being said, what I usually do, I buy ETFs. And the ETF is basically a basket of like the top stocks, right? It's top company in the basket. So, for example, think about Amazon, right? I can't afford to buy 10 stocks on Amazon right now, or even one, for example, because it's like, what, $3,000 per share, right? So what I do, I buy ETF, Vanguard, right? Think about Google. Think about, Microsoft, Apple, Netflix. So usually ETF, and my favorite group of ETF is Vanguards, right? Vanguards have different ones. And the two that I like the most that I personally buy is Vanguard, so VOO, right? And then VGT, right? The growth tech company. This is like the best of the best, company out there. You're talking about your Apple, your Amazon, your Tesla, so these companies, Vanguard just basically buy like so many shares and put in the basket. And instead of you buying individually, they'll say, okay, this Vanguard stock is like $200. And say you buy 5 of them, right, for $1,000. So that means any growth in that ETF, usually they have a growth year over year of 8 to 12%, right? Year over year since the inception. So you could do your research and see. And if Apple goes up, that stock is gonna keep going up. And then you get also dividends, right? So a dividends is basically, a passive income that you get on top of the equity of that stock. So if that stock goes up to, you bought it 200, it goes to 210, guess what? Per shares, you just increase $10, right? Because think about this, leaving your money at the bank account nowadays, in your money market, getting less than 1%, it's a history. Nobody's doing that anymore, right? Everybody is putting their money in the stock market and things like that. So leave a 6 months reserve into your savings account, liquid, that you could touch to pay your, expense, emergency expense. Other than that, I put my money into the stock market and invest in the company that I believe in, right? And start, 80% of my portfolio, for example, I tell this to all my people, it's what they call boring portfolio, boring stocks, right? Boring company. This is a company that your grandmother would invest on. This is a company that your financial advisor would invest on. This is your company that Warren Buffett, Jeff Bezos, Elon Musk, who else? You name it, top, Google CEOs, all these CEOs will invest on because this is company that's called blue chip company that they believe on, that have strong numbers behind them, right? I'm talking about, for example, your Disney's, your Apple, your Tesla, your Amazon, your Netflix, Uber, etc. This is a company, Verizon, AT&T, company that's been around for decades and decades and decades. They probably will have a drop, but their drop is very significant. And this is a company that on top of the equity will give you dividends. I love it. I love my dividends, right? So not only I invest, but I invest in company that pays me every quarter. When they have an earning, I want a piece of that pie again, right? And that's literally what I do. So you want to open your brokerage account. But there's a lot of brokerage account out there, guys. There's nowadays, it's commission free. You want to make sure it's commission free, so you're not paying fee to trade, right? So Robinhood is number one, good one, easy to use. The interface is easy. TD Ameritrade. I use specifically Merrill Lynch because I used to work for Bank of America. And I buy my stock. 80% of my portfolio are boring company, boring stocks. It's stock that I don't have to be watching every day or every month on it. I just leave it there and it grows, right? And then 20% is stocks that I play with, right? I should say I gamble with, right? It's probably go up and down, but it's only 20% of it, right? So as you learn, right? If I were you, I would start with company that you trust. Mainly, start with some ETFs. So Vanguard, VOO, VGT. Those are the top one that I trust, that I vouch for, that I use. I mean, again, do your own research. This is not a legal advice. And as you learn them, and if you believe on it, you have more money, buy more. Don't worry about the cost. Oh, but I bought at 200, now it's 210. Well, that's good. There's more reason for you to dollar cost average, right? Buy more as you go. Because if you see the history behind it, you'll see that it's not going to keep going down, those type of company, right? But your dollar cost average like that, you're not paying too much for it, right? And you just keep buying. Say you don't want to buy those VOO, VGT like ETFs. Start buying companies that you believe in, companies that you use all the time. Look around. For example, I'm using right now an iPhone to record this video. Guess what? Apple. I have stocks on them. Look around. I bring my kids almost every other week or every week to McDonald's. Guess what? I have stocks in McDonald's, right? I'm an investor. I have properties, right? Guess where I shop a lot for my home improvement? Home Depot, Lowe's. If you go on my portfolio, you're gonna find Home Depot, Lowe's. Guess what? My wife started loving Costco, right? She stopped buying stuff there. Almost, 90% of her shopping is done at Costco. Take a guess what I have. I have Costco stock. But so look around for stuff that you use day to day. Ask family member, things that you believe in, things that you're using day to day, things that the multitude around you are using, and understand, start there, right? Don't buy stock just because I'm telling you, or some random individuals on YouTube is telling you to buy it, or your barber shop, you heard it at your barber shop, or a friend text you, hey, I just bought this ICCV stock. Don't just buy because they told you that. Buy because you did your research, you believe in it, you have the extra money, right? You already paid. Remember I told you how to do it. You already bought you already pay off your interest rate. You have extra money that you don't have to worry about, and you go from there. Does that make sense? Hopefully it makes sense. Happy investing. Make sure you do your due diligence, do your research, like and share this video. I'm gonna come more with some more stock tips and some investment tips, and we'll go from there, all right? Love you guys. Please subscribe, set the notification bell, and watch the other video. Like every video that I have here, so like that, YouTube will share it for me, all right? Thank you.